Cloud. Okay, we are recording. Welcome to our Friday training, going over a little bit of the all the taxing items for W-2 and quarter reporting for 2025 W-2 calendar year. Again, if you have any questions, please unmute yourself and you can ask a question or you can comment and we'll make sure that we'll keep in the chat room here if you have any questions, or you can enter a ticket and send that to us and we can answer it there also. So again, we'll be going over a little bit of what was underneath our SSD meeting trainings. Like again, Lori did that. I think it was that last weekend or last week or 2 weeks ago about the calendar year end. She did mostly everything else that was out there, but I will be going over a little bit more specific of the taxing items that we will have for you might run into over this processing. So again, you can find that here under our SSD trainings calendar and meeting, and then right here under our USB calendar. So again, like Lori did, we have our agenda there for that she did, but we also have all these links that you can use for when you're processing and for your districts to use. So I just want to go back and make sure you're aware of all these links that we have here for you. Okay. So the first thing we're going to be going over and what I'm going to be using is our USP calendar checklist. And also I will be going back and forth to our reporting special situations, which you can find down here under appendix and useful procedures. So again, that's kind of what I'm going to be bouncing back and forth because we have a little bit more detail in these wiki pages here that will help your districts when they're going through and adding these adjustments for their employees. So first I would like to do is the USB checklist, which I'll be using a little bit of. So again, she kind of skipped over the ones that we were going to go over today because there's quite a few. So what we're going to do first is the ones that are added prior to the last pay of the district. So hopefully they're probably working on that right now. If not, maybe getting completed already. So hopefully they have these entered in their future or current payments. Otherwise, they're going to have to do adjustments. But if they're still working on their last payment of the calendar year, then they're good yet. So that will save them a lot of adjustments. So the first one would be here in our number 2 checklist would be that life insurance payment, which is huge. That one, if they can get that entered in for any employee prior to that last pay, they're going to want to use in current and future the life insurance type, payment type, excuse me, of life insurance premium. So again, under current or future, you would just go ahead and create that payment for that employee. And they would add that payment using that life insurance premium. So again, they would want to make sure they have that entered again prior to the last payment. So if it's 1 in 50, now if you try to save it, you're going to get that warning that life insurance is not applies to retirement. So they'll have to remember to uncheck that box before they save that. So again, they can add that. Oh, where's my checklist? There we go. Again, prior to that payment. I will be going over if they miss it at the end of before the last payment. So I'll do that on the next section on the checklist. So this is just if they're adding it during the payroll before their last pay. So again, that goes for adoption agency, for the adoption assistant. If they have that set up as a payroll item and it's being deducted each pay, they're good. If they have that total payment for the year and they still have a pay left, then they can go ahead and enter that in future and payroll and using that pay type of adoption assistance. And then they enter that amount that they get either from the employee or probably from the adoption assistance. They probably will get that amount that was reported that needs to show on the employee's W-2. And then the other one is the non-cash taxable. They want to make sure this is entered using future or payroll for that non-cash taxable benefit. So they'll use that pay type of non-cash taxable benefit for that total amount that needs to be reported on the employee's W-2. So again, if they're still on the beginning of their W-2 calendar, the prior calendar year closing, and they were able to get these three in prior, then that's all they need to do. And it updates the accordingly, and no adjustments are needed. So hopefully they're still at this processing point and they can get that in. But if they don't, we do have instructions, detailed instructions for that next step if they don't get that information in. So we're gonna cruise on down to number 24 of the checklist. Right down here. So now we're in, if they did not get these certain amounts in before the calendar year in, they can use the adjustment entries or adjustment under core. So for dependent care, we can do here, move over here. So again, we have these adjustments here listed under core that you can use if you have questions on the entries. And if you go to the front here, we have them linked so you can just click on which one you want to go. So we have them the detailed out here and underneath adjustments. So if you click on this, if not using the dependent care type, you want to make sure that any amount above the 5,000, you need to create the core adjustment for that under 001 federal payroll item. And what that will do will be listed in box 10 of the W-2. So if you have any employees that use that dependent care, then they want to make sure if they did not get that process before the last pay, and again, if they go to, I'll just add one here. I do not have that. Okay, I was thinking that was under future, but it was not. So there's so many to add. So they need to get that payroll item so entered under the dependent care. Again, that will update the total and applicable gross on the federal, Ohio, and the city if applicable. So again, they might have to ask the city if that's taxable. So those are the three that are going to be added for any amount exceeding the $5,000. Okay. Probably not too many that have that one, but just in case. The next one is the third-party sick pay. So again, we have instructions here under adjustments, or we have more detailed instructions under, if you click here, and it takes you to our next, the other under useful procedures, reporting special situations. And it's just a little bit more detail of each of these that that districts might use. And again, if you click here, that'll take you to that same page of the reporting. So I just wanted to have two open here. So the third-party sick pay, we'll go over the taxable one first. And I do have an example here, which I got off of our training, that SSC or excuse me, um, the website I just showed you for the URL for our meeting, excuse me, our calendar and meetings. Here it goes. So I got that off of here. And here's an example of what they probably will get if it's a taxable, the districts will receive. So again, they will want to review this to make sure that these amounts are what is should be reported. So again, it should be reported for the gross and taxable for your federal, Ohio, and OSDI, the federal income tax that was withheld, and then the Medicare wages, and then if FICA or Medicare was withheld. Now, if they have a FICA withheld, this usually is not, should not be for districts, for employees through a district. So this is very unusual if that is withheld. So they want to contact this third party sick pay, and review that with them. They might need to change that and change that over to Medicare withholding, or get that corrected and then send them a new report because it should be Medicare. So if we go back over here to our US, to the checklist right here. So they're going to want to enter a core adjustment for that employee using the pay, sorry, entering the total gross for federal, Ohio, city, OSDI, and Medicare. So they're going to have to make all these entries. So they're going to have one for federal, one for Ohio, one for city, and one for OSDI and Medicare, using the total gross, and then using this amount here that they have, the total for the payment. Then they're going to have to do the same thing for applicable gross. Again, creating one each for federal, Ohio, city, OSDI, and Medicare. So once they have all those created for total gross and applicable gross, then if, only if federal income tax was withheld, which here it was, so we will need to add a entry for that, for the amount withheld for the federal tax. Then we will need to do the Medicare portion that we have showing here for the $20.30. So again, you need to select Medicare, the amount withheld, and then a date that's in the current posting period, which would probably be your December date. And then you also need to do a board's amount of payroll items. So the board will need to pay that portion for the employee for the $20.30. And then they would need to do another adjustment for board's amount of payroll item to Medicare, the 692 payroll item Medicare. Okay. So again, if the employee is a full Medicare pickup employee, so again, they're going to want to make sure that they enter the correct adjustments then for the Medicare pickup. So they're going to use one adjustment then entry for board pickup amount of payroll item for that 1.45%. So let's see. I don't think I have it here. Gross. Board's amount, no. I thought we had it. I had it in here, but it's not. So again, they will have to calculate what the taxable amount is for the board pickup amount. And then they would need, sorry, I have this problem with my computer, it always pops up. So they want to make sure that they do get that entry in, but we do have that right here in our documentation to make sure they do add that one entry for the board pickup amount for the employer, for the board, excuse me, the board pickup amount. Now, if it's non-taxable, then the employee will need to just add federal tax 001 for the employee for the third party amount. And then that's all they will have to do if it's non-taxable. And then that information will get placed in box 12 as code J. So when they file their W-2, they will see that that's under box 12 of code J if it's non-taxable third-party sick pay. So they're just reporting that amount. It's not affecting anything. So again, these have not changed from prior years, the third party. So again, we have the detail on each under adjustments or again under the third party sick pay. Where is it at? Right here. So again, if they have any questions, we do have those adjustments here. Okay. The one thing may have to remember is the city tax. If it is taxable, then they might have to create an amount for the withholding amount for the city tax. Again, this might be for RETA or CCA processing if your districts have that city that employee pays into. Then they will have to create another core adjustment for the amount withheld for the city tax that will need to be taxed on that amount. So again, they might have to do some checking in if it's again a RETA or CCA employee, so that way they get that amount paid to RETA and CCA because their core, if they're doing the adjustment in the applicable gross, it's going to up their applicable gross and they're not going to balance. So again, they might have to do an adjustment to get that RETA and CCA payment correct for that amount withheld. Again, if it's not a CCA or RETA and they pay the city tax when they file their taxes, again, they can do the applicable gross when they can do that correction and pay that amount then when they file their taxes. So again, they just kind of have to look to see where that payment is going to. Okay. And again, remember on the 941 for the third party sick pay, there is a section there that they probably will need to fill out under the 941. So again, we have our information for the IRS 15A on these payments. So under the ITC calendar here, we do have that publication here for them to review for that sick pay. And we went over the FICA. If they did have FICA withheld, then they want to make sure they contact and get that corrected. Okay, so that is the third-party sick pay. Now we're going to go down to our next section, which is life insurance, which is always fun if they forget to get that included in the before the last pay. So again, these instructions haven't changed from last year. Again, we have them detailed out under, if you click on that, that definitely will take you over to this reporting special situations. So we're going to bounce back and forth between the checklist and, excuse me, right here. So if the life insurance premium type was not included before the last pay, which we went over in step 2, then they would need to do step 26. So again, they would need to calculate the amount of the life insurance that their employee is going to need to be paid. And we do have the steps here of how to calculate that amount. Now, if you need more information, we do have the link here that you can click on that takes you directly to the IRS for that group term life insurance and how that cost is calculated. So then once you have that calculation figured, then you can go ahead and start your entering of those life insurance for those employees. Some of districts probably have quite a few, and others might just have a handful that they need to enter. So if it was entered within the calendar year, we have those steps on here again under the useful procedures under reporting special situations. And you would use the life insurance premium under future and under current life insurance premium here. And again, these do not get retirement, so you have to remember to uncheck both under future and current. The applies for retirement. And again, when it runs through payroll, it's going to be taxed according to the federal rules. So no amount will be withheld on the federal, state, or OSDI. Again, it does get taxed for Medicare and social withholding, so that gets calculated during payroll. Again, city withholdings, this is all going to be determined by that payroll item configuration tax non-cash box. So again, I will show that here. Payroll item configuration, city, right here. This is what we're looking for. City tax annuity options, and then the non-cash or non-wages. Oh, excuse me. Nope. Thinking the wrong one. Right here under options. Let me rephrase that. Non-tax, non-cash earnings. City has too many options to select from. So again, this is where that is looking for. So apologies on that for confusion. Okay. All right. So, where were we at? Getting myself confused there. Where we were at? Where were we? Ah. Oh, right here. Sorry. So let's move that over. There we go. And then, so if it's checked, then the life insurance, the payroll will be adjusted accordingly for the total gross and Apple gross, and the city tax will be withheld. If it's not checked, then they can go ahead and it won't be added to the total gross or applicable gross amount. So effects on the life insurance premium pay type, we listed here what it affects on what reports. So if you have questions and you're not balancing, and you know it might be because of the life insurance, I would definitely check this page because we have them listed here, like what it affects on the pay report, what it affects on the pay amount summary report, the payment details, and then also where is this included? So again, what effects of this life insurance on different pay types on various reports? So next thing is if it was not used for the last payment of the year, then they're going to have to do quite a few steps. Once they get the amount calculated, then they'll use the core adjustment of life insurance for that calculated taxable cost amount. And then what it does, it updates the total gross and applicable gross of the federal, Ohio, city, again, if they have that flag in payroll item configuration, checked or not, medical payroll items, and the OSDI. So again, they don't have to do any adjustments for the total gross, but And they will have to do one more actually for applicable gross to make the report balance, which will go through here down at the bottom, unless it's Medicare pickup. So if the amount is Medicare and the employee pays for his portion, the board pays for their portion, then that amount needs to be calculated and an adjustment needs to be entered because the Medicare amount needs to be figured. So what they will do is take that $100 times the 1.45%, which is $1.45. So they will need to make two entries here. So first one would be the federal tax life insurance for the $100 total cost. And this is the cost that they calculated when they did that calculation for the life insurance. And again, they enter the date of the current posting period, which will be for each one entries that you're doing. And then you're going to take that $1.45 for the employee portion and the $1.45 for the board amount and create two more entries for the amount withheld for the $1.45 and then the $1.45 for the board amount of payroll item. So what does that affect then? So it affects the life insurance and the effects of the life insurance and Medicare adjustments that we just did above on the quarter report. We added each bullet point here of what does the federal tax, that $100, for example, what does it affect? It affects the individual employee amount to date calendar taxable wages. And it also gets included on the non-cash earnings report. Excuse me, down here. Non-cash earnings. So it does get added in this line right here. And once it gets added, now if you added it during payroll, it's not going to throw your, you're not going to get an arrow because you did it during payroll. But now since you're adding it after the fact and you're doing adjustments, you are going to get a calculated adjusted gross difference here. So just a reminder, that's going to throw that off and you are going to get that error message. But as long as it's just your non-cash earnings and you know that total amount and you know that this is what it is, then you're good and you can proceed on. Again, in the 941 line of the quarter report, it's going to get added to the quarter to date taxable amount. And then the 941 5C, quarter to date Medicare taxable wages. The amount withheld adjustment from the Medicare, the $1.45 amount. What does that get added to? It gets added to the 941 Life 5C quarter to date employees Medicare, and then again the 913 federal withholding deposit amount. And then the $1.45 gets added to the line 5C for the employers, and then again to the federal withholding deposits. So hopefully this will be helpful when you're adding and you're trying to balance. So then here, we just have screenshots of what those adjustments should be like. So we're trying to get it very detailed for the district. So hopefully this will help them when they're getting through these adjustments. So again, life insurance for $100. Then they need to add another one to the 692 for the amount withheld for the $1.45. That's the employee portion. And then again for a 692 for the board's amount of payroll item for that $1.45. Now, what happens if the employee is Medicare pickup? Again, we have it detailed out here for you. You have to do the calculation on that $100. So once you do that 98.55% divided by that life insurance amount, it's a 101.47. So that's the pickup amount. It's like 2 cents higher than the regular $1.45 that we had. So that is what we consider the pickup portion, the amount. So once we calculate that amount, then we're going to use that 101.47 to get the Medicare pickup that the board is paying for. So you take that times the 0.029, and that equals to $2.94, or divided by two, $1.47. So the employee amount paid by the board, and then $1.47 for the board amount. So then down here we have the steps of what adjustments that need to be done. So again, federal tax payroll item, pay type life insurance, the current posting period date, enter a date, and then enter the $100. Now you don't want to enter the 101.47 because we're going to do that later, coming down here in our next steps, to get that adjusted for the applicable gross. So we just want the $100. That's all you want, the straight amount. Don't add the 101. Then you're going to go ahead and create another Medicare payroll item. Choose board's pickup amount of payroll item. Now again, you're only going to add the $1.47. You're not going to add the $2.94 because if you add the $2.94, it's going to double it even more. It's only $1.47 because this board pickup amount knows what's to do with it when it's putting it on the employee's W-2. So it's going to include it on the Medicare pickup line on the W-2, and then also on the Medicare tax withheld line. So on the W-2 form or on the W-2 Medicare pickup, it knows to add it here, and then it knows to add that $1.47 here. So we don't want to do the $2.94. The system is smart enough to know. Then we add another Medicare item to get the quarter report to balance, and that's the board amount of payroll item for the $1.47. So we need to add one more line, and you entered the calculated board of withholding amount. Then you add another one for the applicable gross, and you enter in the original applicable gross amount, and that's that $1.47 that we talked about earlier. And this gets the W-2 and the quarter report into balance. So again, the city wages, you have to determine how that is checked on the tax non-cash box in the payroll item configuration for the city that the employees have. Now, if they have OSDI withholdings, it gets added. So if you have employees that have multiple OSDI, they might work in several different schools that have different maybe ESCs. I think that would be a good example where they're bouncing around to different schools and it's all getting taxed different OSDI. When you add that life insurance, it's increasing the an amount for each of those schools. And if you don't want that to be increased, the district's going to have to do some calculations and adjustments to get the amount with reduced on the OSDI, so it's not updating each of those amounts, and they're paying the applicable gross is too much for each of those OSDI. So we have the calculation here. So what they could do is to get that cost per month, they could take the total life insurance amount divided by the number of months the employee had the life insurance. So say they had 12, then you would divide it by 12. Then you take that amount that we just figured times the total months in each school district. So if they know how much they work in each of the school districts, then they can figure and take that times that amount. Then what they would do is create a core adjustment then, selecting the employee payroll item OSDI and applicable gross. And they want to enter a negative amount for the amount that they figured to get each of the OSDI for each school district the appropriate amount of applicable gross. So again, this would be only for employees that work in multiple school districts. And then they would have to repeat that for each OSDI payroll item that they have for those employees. So hopefully their districts don't have that many people that are affected by this life insurance like this. But just in case, we do have those steps here for you. Um, the next one. Okay, excuse me. What is it effect on the life insurance and Medicare adjustments that we just did above on the quarter report? We have that broke down here. And what is it hit on each line? I'm not going to go through each one because we got it pretty much listed here for each one. What the $100, what is that hit? The board pickup amount of the tax Medicare, the $1.47 that we entered. What does that affect? That board amount of payroll item that we added to make the quarter report balance, what does that hit? And again, that applicable gross, that last entry that we added, what is the update? Now, again, you might have some employees that, since they didn't get this updated prior to the last pay, and if they're over 200,000, again, if they got it added in, then the system does it for them. But if not, for those employees that are getting that are already over that 200,000 mark at that last pay, after the last pay, and they do these adjustments, um, they're going to see they're going to have to do another entry. So make note of that. So again, this is only for employees over the 200,000 mark. This is that quarter to date taxable wages subject to withholding line. In order for that to be updated, that applicable gross will do this portion for them automatically when they do that line. So they don't have to do one there. But if to get the W-2, when they run the W-2 report, they're going to get an error saying warning possible Medicare discrepancy. So if they do get this amount and they do have life insurance added for that over for an employee that hit that over 200,000 mark, have them check this first for that employee and make sure they did this final adjustment. If they did not, then they are going to get the error. And that's what this adjustment here is going to remove. So what they need to do is figure the board's pickup amount of payroll item. Example, the $100 times the 0.9%, 0.009 is 90 cents. This is the adjustment, extra adjustment that they will need to do. So what that does is update the W-2 report for the 692 Medicare and the Medicare pickup. It adds it to this and this. So again, I have the entries here. So we had them listed, and plus we have screenshots of each of the entry that you have to do if it's Medicare pickup. So again, the $100 for life insurance, then the $1.47 for the board's pickup of a payroll item, the $1.47 for the board's amount of payroll item, which I said up here, updates these two figure lines here. And then we need to add another line for the applicable gross. Oh, excuse me. That's what I was talking about, applicable gross. One other thing. This is a new entry or a new field that we added. And I know we've gone over this with the releases and such, but just a reminder, the apply to employer pickup, if they don't check this box, what's going to happen on the quarter report? See if I can find, oh, Lance, go. Of course, I need somebody that's pickup. Oh, PHELPS Phelps. Well, oh, there we are. Probably pickup. There we go. So here Lance has a 692. Now, what if this employee had employer pickup for or employer regular line for half of the year, then at the fiscal year, the employee went to full pickup? That employee is going to have two lines, one for the regular pickup, employee contribution, and then they're going to have one line for the employer pickup line. So now that he's full pickup and we need that amount to hit this line here only and not the employer employee contribution line, this is what this new field here was added for. Because what was happening when we couldn't tell the system what applicable gross line do we want it to hit, the employee contribution or the pickup contribution line. So now we have this line here, and that's exactly what this employee apply to employer pickup box does. So it adds it to the $1.47 and it adds it to this applicable gross for this employee on the employer pickup line, and it will not touch the employee contribution taxable gross. So again, they will have to remember that if this employee is the pickup. So that's why we added that here. And quarter report to date. Now, if they leave all boxes checked and they run the W-2 report, guess what? It's going to throw you off on your balancing there. So what we advise to do, and we checked with the developers on this, and really there's no way around it. So what they could do is if they wanted to hit the year-to-date report so they can balance on that end, but then it's going to give the Medicare taxable warning or error message for that employee on their W-2. What they can do is run the quarter report, get that balance, run the year-to-date, make sure their figures are correct. And then what they can do is uncheck that year-to-date box and run the W-2 report then. And then it won't be included on the employee's year-to-date amount. Because some districts use this report, maybe not just balance quarter, but also year to date. And what it does, it throws it in both then if you have those two boxes checked. But then when you do that and run W-2 report, then it gives you the error for the Medicare warning that your employee is off. So just a reminder on that, if they do check the year-to-date box for balancing on the quarter report. But if they don't use quarter year-to-date balancing on the quarter report, then they can just leave it unchecked. Now, this is the last step for the employees over the 200,000 mark. Boards pickup amount of payroll item, that's that 0.90 cents, and year-to-date. Check the year-to-date box. So again, if they don't have any employees over 200,000, then they don't have to worry about it. This is only for that 200,000 employee. Okay. And again, that gets that warning off their employee's W-2. Okay. Is there any questions on the life insurance portion? I know that's a lot to take in. Okay. We will go to our next checklist here. The next one is fringe benefits. Again, we have the link that takes you directly to our useful reporting special situations. And then right here, nope, taxable, I think it is. Yeah. Reporting reimbursable. I'll make sure I grab the one right. Yep, I did have the right one. Here we go. Okay, so the fringe benefit. What you will use then again is the 001 federal tax fringe benefit, enter the total amount of that fringe benefit, and then that gets put in box W on the W-2 box 14 as the code fringe. So when you go to that tab, we have all examples, which these have not changed over the years either. The information of how was that fringe benefit maybe paid to the employee throughout the year. And then we give different scenarios of what, if that needs to be included on certain boxes for that employee. If there were pays remaining, we have the steps here for you. Oh, right there. So again, I won't go through each one of these, but you can step through and look at the specific scenarios of what that fringe benefit, if it was paid maybe through USAS, and there are remaining pays to the calendar year. If it was paid through USAS, but there are no remaining pays to the calendar year, what steps do I need to take? A payment was paid in USAS disbursement and the amount to be included on the W-2 and federal state wages. So again, we have all the steps here for you. If they need to be included on box 14, if the payment was already paid through USPS and the payments are to be included. Maybe the payment was already processed using a non-cash taxable pay type through current and future, but also needs to be included on the employee's W-2 on box 14. What if the payment was already processed using the taxable benefit adjustment type during current and future, but we need to include it in the box 14 for the employee? I think we have covered each scenario, pretty much what a district could run into. If not, please let us know. We can help you with how it should be processed. If not, you can always ask the tax legal advisor on that, because there's some things that we can't determine how it should be taxed. So they probably want to reach out to their legal advisor on that. Okay. So again, I'm not going to step through each one. Um, it's pretty much, like I said, it's the same as it was prior on the prior years, and we've had, and we kind of went through each one, and detailed them out, what it hits and what it updates. Okay. The next one is moving expense. Again, this one is only for active military employees. Again, if your districts may have one, then they want to make sure if they have moving expenses for these employees through that third party, then they need to be reported. So again, they will use core adjustments, federal tax payroll item, select the moving expense type, and enter the current posting date and enter the amount of that moving expense. Then when when they run their W-2, it will be on box 12 with a code of P. The other one that probably doesn't get used very often, again, is the company process vehicle. And again, we do have those in more detail in the adjustments in our documentation. Vehicle lease. It's called the vehicle lease here. So again, you enter the core adjustment for the employee, federal tax payroll item, vehicle lease, and the amount of the company vehicle lease that they have figured for that employee. Then that goes in box 14 for that employee. So the other thing is adoption assistance. If they don't have that payroll item already set up during the year and being withheld during the pay, then they can either enter that last pay in current or future for the amount of the adoption assistance. If they or if they don't, then they can do the core adjustment for that type adoption assistance for the amount that was given to the district for them to enter. And again, if it's city tax withholding, then again, that all depends on that non-cash earning for that employee on that payroll item configuration. And then if not, they might have to do some adjustments if they need to for the city. The information then gets placed on box 12 as a code T. And then we do have that reporting taxable adoption assistance line under here for them to go over if they have questions on that. Okay. Okay, the next one is the non-cash taxable benefit. Now, again, like I said, we did some updates with this to now include it in the quarter report non-cash earnings line because last year that was not included in that. But there was a federal update that they said that that has to be included in that on the quarter report now. So we did add that. So again, we have our reporting taxable benefit cash line under here under the special situations. I can't talk. And then it will be under the non-cash taxable, the NC3. Okay. So again, if they include it in the last payroll of the year, they're good to go by including that non-cash taxable benefit payroll item when they pay item type when they do the current or future. And again, it updates the federal, Ohio, city, OSA, and Medicare tax is calculated. And then the city again is the tax non-cash earning field. So again, they will have to find out how that city is going to be taxing that non-cash subject. Exactly what this amount is going the taxable amount is not in gross totals found on the pay report or the report's pay amount summary report options.
Is everyone still there?
Yep, happy Friday.
Yeah, we're here.
I think Andrea, I think we lost her. Let's give it a few minutes to see if she can hop back on. I'm not quite sure where she was at, so we'll give it a few minutes. I know there's a question in the chat regarding the overtime and processing your first, districts processing their first pay in January. Please know that I know that we've been saying this for a little bit of time. We are in the works of putting together a document. It is almost done, I promise you. By the end of today, hopefully within the next couple hours, we can have that released publicly and for you to pass along to all of you. Again, I apologize that it's taken so long, but we didn't get the information from the IRS to know how this needed to be reported. So we kind of were late to the punch, so to speak, to get this put in place and released to all of you. And then in the meantime, we've kind of, you know, worked through making it easier for everybody and defaulting some things that we weren't defaulting before. So we apologize. We're all in this together. We're trying to make it as easy as possible on everybody. And we know that there's lots of questions out there. So this document is gonna hopefully address all of those. And you'll have one place to go to look through commonly asked questions, and answers and those sorts of things. So again, that is coming today. I promise you, hopefully, early afternoon. So if you have any questions at all, once you read through that, you know where to find us, you know how to find us, please reach out and, we'll be happy to answer those, as they come in. And I think Andrea is back.
I am back.
now, So I'm gonna stop
I am
talking and turn it back over to her. Thank you.
Thank you, Lori. I have no idea what happened. It said I lost Zoom connection, so I apologize. It took me a while to get back on. I've never had that happen before, so sorry about that. I was just gone. Okay, but I'm back. Okay, so we'll start right back in again. Okay. So we'll include the last payroll. I gotta get my wits together because it scared me that I lost my Zoom connection. Okay, so we were talking about non-cash earnings. Okay, so again, this was updated probably a couple releases ago where now it's going to be included, like I said, on the quarter report here now. So you will get that W-2 or the quarter report will be off, and you get that adjusted growth just like life insurance. So let's just think of it exactly like life insurance. It's processed the same way, it's taxed the same way. The only thing different is the actual pay type that you're selecting. So once you figure out that non-cash tax amount, and if you didn't get it in prior to the last payroll, I think I was right here when my screen went dead. What was that amount? Where is it going to show? Like the tax amount will be added to the quarter report total summary non-cash earnings under other pay and all pay totals. The taxable amount will be under the quarter report total summary, non-cash earnings. If the remaining pays, you have remaining pays to be paid, again, you want to use that non-cashable taxable amount. And then when they run on the future and payroll, and then when they run it, then everything will be processed accordingly, and they don't have to worry about doing an adjustments. So again, if they forget it, again, it's just like life insurance, what we just processed through. Medicare payments adjustment will need to be added. And then the taxable amount, like I said, does get reported on the non-cash earnings line now. So this should make districts a little happier that they can bounce a little easier because this is included now. It's not being skipped over on the quarter report. So once they have that amount figured out, what it does then when they do the 001 federal pay type and taxable amount, this updates the total and taxable gross on the federal, state, city, OSDI, and Medicare during W-2 report. And again, no adjustments are needed for the taxable and total gross. So again, you add your 100. And then from here, what does that affect on the quarter report? It affects the individual employee, again, the to-date total taxable wages, deduction item summary, the quarter date and year-to-date taxable, total summary non-cash earnings, again, a difference in adjusted gross would be given. And then again, it gets added to the line 2 and then the line 5C. Again, city tax. Again, if city tax needs to be withheld on that and the amount will need to be figured out, again, if the employee pays their taxes and their city tax on their own, then again, they can pay for that after the fact. But if Rita and CCA and districts pay that, that amount will need to be an amount withheld, need to be calculated on that applicable gross, and an adjustment will need to be added for that amount. So that way that gets paid directly when they create that final check to CC and Rita. And again, we went over that with the life insurance. So again, it's the same step that they would need to do for that city withholding for that non-tax cashable amount. Again, OSDI, same thing like we went over with life insurance. If they are from multiple and they work in multiple school districts, again, they might have to do some figuring to get that amount correct for the applicable gross to reduce it so they're not paying the full amount on each school district because they may not work in each school district only a month or two a year. So again, we have the or what you need to do here to get that cost per month, and then how to reduce the applicable gross for each of those school districts. So the next one, if the employee is regular Medicare, so they have to do they have to figure the Medicare, and that has to be added as the adjustment using amount withheld, and then also the board's amount of payroll item. So again, the district will have to either ask the district or the employee for that employee portion, or they can maybe do an air adjustment the first payroll in January to get that amount withheld. But then they got to remember that they're going to want to remove that amount because they don't want to affect the next W-2 for 2026. So again, up to the district how they handle that to get that reimbursed from the employee. So again, example, you take the $100 times the 0.0145, you get the $1.45, $1.45, and then you add the amount withheld in the board's amount of payroll item. And here we have screenshots of each entry of what they need to add. Now, what did these affect? Again, they affect the exact same thing as life insurance. The individual employee contribution, the total summary non-cash earnings, deduction item summary, the amount withheld adjusted for Medicare tax, line 5C, line 13, and then again, the board's amount payroll item that we added, line 5C and line 13. Now the Medicare pickup, again, that's always a fun one. If it's fully paid by the board, again, they will have to do their calculation for that. So again, we're using the same example that we did for the life insurance for the $100. Again, it was the $1.47. So again, they only have to add the one amount, not the $2.94. Only want the $1.47 because again, the quarter report knows by using this type, it knows it needs to spread that out against the pickup. It knows that it needs to go from Medicare pickup and Medicare tax. Okay. Then they need to do that another line for the board's amount of payroll item, what the calculated board amount for the Medicare for 692. And then they need to do one more to get the quarter report to balance the applicable gross for that $1.47. And again, they want to make sure they apply to the employer pickup checkout box. So that gets hit correctly on the employee's correct line here. Okay. So again, the amount withheld is added to all the taxable gross of the federal, Ohio, city if applicable. Again, payroll item, have to check with the payroll item configuration. And then the OSCI to be taxed. Again, it would not be added to the Medicare taxable gross. So again, for the employee Medicare pickup calculations, we have an example of here of how that is calculated. And then again, what each adjustment, what is it hitting? And why do we have to do this to make the reports balance? So the $1.47 board pickup amount, this updates again the Medicare pickup and then the Medicare line on the employee's W-2. The $1.47 that we added for the board amount of payroll item, that updates the 941 quarter report, quarter to date employers Medicare contribution line. And then the $1.47, the applicable gross adjustment that we added, that again updates the employee's W-2 taxable gross and for the Medicare and the quarter report. So again, apply to the employer pickup in the quarter to date field needs to be checked, and then that will update that field for the employers if they're full Medicare pickup line here. So again, we gave screenshots of each of the items. Again, this is for employees over the 200,000 mark. Again, they will have to figure that amount out, and we did the same example as we did NC1. The board pickup amount of payroll item for that 90 cents. We did update W-2, NC3, and then how we figured that. And then the year to date. So again, they have to do that one final step yet. Okay. So again, we have it detailed out of what these items affect, these adjustments affect. What is it hitting on the quarter report? We have these labeled here. I won't go through each one, but we do have them listed here. So if you are questioning what those adjustments are going to affect, then we have that here. Okay. Any questions on life insurance or NC3, excuse me? So really the only thing that kind of updated from last year is that new apply to the quarter report and that this is kind of new from last year. And then also the $200,000 or the 200,000 mark that was missing. So those are kind of the two new updates that we have for the NC3 and NC1. Okay. So hopefully your districts have everything in prior to the last pay and you won't have any tickets for any of these questions on these adjustments. So we can only keep our fingers crossed for you guys. Okay, the next one is the employer health coverage costs. Again, you might have districts that are have paid some out of USAS and some halfway out of payroll. Then they will need to get that total amount and add an employer health coverage costs adjustment, selecting health insurance type, and adding the full amount in. So you want to make sure that they enter the whole amount of what the employee paid for their portion or employer portion of health insurance. Now, if you have all your payroll items selected already, right here. This is what that W-2 is going to be looking for, this employer health coverage. So as long as the districts have all these boxes checked prior to running W-2, the system knows what to pull in for that employer health coverage. Now, if again, like I said, if they don't, and they the employee maybe has been paying out of pocket because they've been on leave for maybe for a certain amount of time, but they want to keep their health insurance through the district. So they're paying out of pocket to the district, and they're probably depositing that directly into USAS to pay for the insurance. So then what the districts will need to do is figure what that total amount was. Maybe she paid some already out of payroll during her when she was working, and then what she was paying towards the district at that time. Then they will make sure that they enter the total amount for that insurance. Now, if the districts don't have any type of those employees, then they don't need to worry about adjusting and doing this adjustment. Now, if they have multiple adjustments for employees and they have maybe 50 and they don't want to hand input those, we do have the mass load that they can use to create a CSV, and then they can update that CSV for the file requirements for the headers, and then they can upload that into mass load using the adjustment journal importable entity type. So mass load, and then they would choose the adjustment journal if they have to do multiple adjustments and they don't want to hand input those. Okay, and then if they do have any adjustments, again, that would be box 12 coded with DD. Otherwise, the payroll item configuration does that for them, and it gets coded without any adjustments needed. The last one is the health reimbursement arrangement information. Again, this is only for your districts that have less than 50 full-time employees and they don't offer any health insurance. Again, I don't know how many districts have that, but again, we do have this adjustment here for them so they can add that if they need to. So those would be who worked 130 hours a month or 30 or more hours a week for 120 consecutive days. And then they would figure that amount, use that amount, and enter it under federal tax, health reimbursement, in the enter amount. Okay. So again, those were kind of the ones we wanted to hit for today. Again, please utilize the adjustments that we have here and also those special reportings underneath useful procedures. Is there any questions on any of the reporting taxable items for the year or something I didn't hit that you want to go over? I think I hit them all that we have out there. If not, please open a ticket if you do have questions coming in from districts or get a hold of your legal advisor from the districts and they can help you with that. Okay. Again, sorry about my Zoom canceling off of me. Don't know, I never had that happen. But I think Lori said she went over what the new overtime and blended rate. We're working on documentation to get that updated, and then the confusion that it's causing with your districts right now. So, okay. Anything else? Okay, I think that's it then. I hope you all have a wonderful Christmas. It's upon us, so hopefully you're all done shopping. I'm not done yet, so. And I wish you a very nice Merry Christmas. Thank you, everyone, for joining.